Hi everyone. Welcome to my channel. Today, we're diving into an important topic in business finance, accounts payable. Whether you're a business owner, an accountant, or just someone curious about how companies manage their bills, this video is for you. By the end of this video, you'll understand what accounts payable is and why it matters, the role it plays in a business, the step-by-step process of managing accounts payable. So, let's get started. What is accounts payable? Simply put, accounts payable, AP, refers to the money a business owes to its suppliers for goods or services it has received but hasn't yet paid for. It appears as a liability on the company's balance sheet because it represents outstanding obligations. Think of it this way: if your company orders office supplies from a vendor and receives an invoice, but hasn't paid yet, that invoice goes into accounts payable. Why is accounts payable important? 1. Manages cash flow. Businesses need to track what they owe to avoid late fees and manage cash efficiently. 2. Maintains good vendor relationships. Paying suppliers on time builds trust and ensures smooth operations. 3. Prevents fraud and errors. A structured AP process helps catch mistakes and avoid overpayments. Now, let's break down the accounts payable process step by step. The accounts payable process. The AP cycle involves multiple steps to ensure payments are made correctly and on time. Here's how it works. Step 1. Receive the invoice. A vendor or supplier sends an invoice for goods or services provided. The invoice typically includes details like the amount due, payment terms, and due date. Step 2. Verify the invoice. The AP team checks the invoice against 1. The purchase order, PO. Was this order approved? 2. The receiving report. Were the goods/services delivered as expected? 3. The invoice. Does it match the PO and receiving report? Step 3. Approval process. The invoice is sent for internal approval, usually by the department that made the purchase. Some businesses have an automated system for approvals to speed up the process. Step 4. Record the invoice. Once approved, the invoice is recorded in the accounting system. It is now an accounts payable liability until payment is made. Step 5. Schedule payment. Businesses prioritize payments based on due dates and available cash flow. Common payment methods include bank transfers, checks, or digital payment platforms. Step 6. Make the payment. The AP team processes the payment before the due date to avoid late fees. A confirmation of payment is sent to the supplier. Step 7. Reconciliation and reporting. The company's financial team ensures all invoices and payments match bank statements. Accurate records are kept for audits and financial reporting. That's the accounts payable process. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you never miss an update. Thanks for watching, and I'll see you in the next video.